It's a big, noisy universe of stocks out there. Welcome to Goodbye or Goodbye. Our goal to help cut through that noise to navigate the best moves for your portfolio. Today we're looking under the hood of electric vehicle makers. I'm here with Alonso Munoz, Hamilton Capital Chief Investment Officer. Good to see you. Thanks for coming in.
Good to be here. Thank you.
So your pick today, it's an interesting one, your Goodbye, because it's one that a lot of folks on Goodbye or Goodbye have not liked, and we're talking about Tesla. Now, Tesla, of course, has lots of fans out there. The shares are up in the neighborhood of 5% or so over the last year. So let's talk about why you like it. First of all, you are buying into the autonomous driving story that the company really has said, if you're going to buy Tesla, this is why you're going to buy it.
Sure. How about that chart? So autonomous driving is a core focus for Tesla in the next phase of their growth stage. And so we're looking forward to October 10th, which is the robo-taxi, and seeing how Tesla executives portray the next phase of Tesla growth in automation. We also see that Tesla has millions and millions of cars on the road, not only here, but all over the globe. And so the ability to transition these cars into autonomous vehicles is super compelling for us. You know,
the autonomous capabilities of the cars right now has been under scrutiny by regulators.
Sure.
And there are robotaxis that are already on the road from the likes of Waymo.
Sure.
So how do you think about Tesla with those two sort of potential challenges?
Sure, Julie. I'm glad you brought up Waymo. So Waymo competitor, they have cars on the streets, and folks can get in and take get from point A to point B without a driver. But the advantage that Tesla has is the data. They have vast data, much more than Waymo, to train their vehicles. And we see that as a catalyst for getting this out and rolling it out not only in cities, but in rural areas across the states and the globe.
Gotcha. All right. Let's also talk about one of the other catalysts you're looking at. That's improving financials. What's going to drive those improving financials?
Well, we always talk about margins. Analysts love to critique the margins and the decreasing margins over the last couple of quarters, but their revenues are strong. They have good revenues, they have a strong balance sheet, and they have a lot of cash to deliver on their product roadmap. So that's something that gets us excited. And next week, hopefully on the second or third, we get third quarter deliveries.
Right.
We expect 460 to 470,000. That would be an upside surprise, and that hopefully leads to increased sales. But it shows that Tesla is delivering on their promise, which is getting cars out there.
And then finally, they're not just selling cars, as we know.
That's right.
They do other stuff, including put solar panels on people's houses,
That's
which
right.
doesn't get a lot of talk. They make batteries as well. So, you're looking at that sort of diversified revenue stream.
Well, we are. It's not just a car company. We see it also as a technology company, as a software company, but also an energy company. They have their energy storage business and their solar. Second quarter energy revenue was explosive. It was exceptional. And that's something that gets us excited away from just the selling of vehicles. And the auto industry has had some struggles over the last couple of years in this macro environment, but also with higher rates. So their diversified business lines and revenue there gets us very excited.
And then let's talk about, we always like to talk about a risk too, something that you like. And I actually alluded to it earlier, and it's regulation potentially here. So talk to me about how you're thinking about that.
We do. So regulation and policy. And I think after the robotaxi event, the focus will be on how do we get these cars on the streets without drivers, and how do we make sure that these cars are safe going by our kids' schools, hospitals, on the highways. And so we're going to really focus on what policymakers at the federal level, but also the state level, think about this rollout of autonomous vehicles over the next couple of years.
Also, another quick question, not so much about policy, but about politics, because the CEO of Tesla, Elon Musk, has hitched his wagon very explicitly to former President Trump. What happens if Trump doesn't win?
Yeah, it's interesting. The tariff conversation is, I think, across the board. And we're going to analyze and see how tariffs here in the States, but also internationally, affect revenue per vehicle. And I think Tesla's going to have to adapt. Obviously, he's a outspoken CEO, and we watch his tweets on X. And so it's an interesting company to track. If you look at the stock chart, you pulled it up, it's been a roller coaster of a ride. But for investors that want to participate in the transition to electric vehicles, this is the way to do it.
All right, let's talk about the way you don't think it is to do it, and that's with Rivian. And a lot of people agree with you, right? The stock is down more than 40% over the past year. But let's talk about why here. The company needs cash, right? They have talked about that.
Absolutely. So they need a lot of cash. This is a scale industry. And very recently, this summer, they partnered with Volkswagen. They got $5 billion to roll out the next sort of phase of their growth, which is lower cost vehicles. And so this is something that we're looking at. It's an unprofitable business. They lose money for every car that they make. And we're in an environment where consumers have preferences and there are options. So someone that wants to get into an electric vehicle, doesn't have to go to Rivian. They can go to other options, and Rivian competes with Volkswagen as well. So it's sort of an interesting take.
True. And then in terms of the production of the vehicles, they've had some sort of fits and starts.
I do. I think this is sort of a big challenge for them. Last month they paused the production of their electric delivery vehicle, which are the vans that they make, commercial vans for Amazon, one of their biggest customers. And so this is just one more thing to add on top of the negative narrative for Rivian. But also we've seen decline in production last quarter, specifically as we compare that to the first quarter and the fourth quarter of last year. So we're looking at this, and it looks like they're going to meet their targets, but this is just something that makes us uncomfortable.
Gotcha. And then finally, you said they're rolling out that lower cost version, but there aren't that many Rivians, different models of Rivians to buy.
That's right. They couldn't come soon enough. So right now they have the luxury SUV and the luxury truck, and it's very, very expensive. If you look at their commercial vans for businesses that are making a decision to purchase these vans as well, they're expensive relative to what's out in the marketplace. And so we see this as a headwind for Rivian, and they have to execute. And some of these production challenges that we're talking about make point number 3 even more difficult. They have to get these vehicles out to market, to get sales, to drive revenue, to hopefully become a profitable company, and they expect to do that by 2026. We don't know if they're going to make it.
Right. Well, let's talk about what could turn around. Maybe doing all of those things, cost cutting, improving financials. They got that infusion from Volkswagen, as you said. Maybe that will be the bridge.
They did. So that's the key. If they can lower their cost, if they can leverage their partnership with Volkswagen, and they can get production, crank production up, and get cars on the streets, I think that would be really positive for Rivian over the long run.
All right, Alonso, thank you so much for being here. Really interesting for Goodbye or Goodbye. And thank you so much for watching as well. We'll be bringing you new episodes at 3:30 p.m. Eastern.